Good evening, everyone. Time for another silver update. I wanted to start with dispatching a couple of criticisms that I've had. First of all, this is a legitimate one. I had posted the chart of the US dollar Swiss franc, and I inaccurately commented about how the amount of dollars would buy Swiss francs. Anyway, the point is that the dollar is collapsing against the Swiss franc. So this is the 1-to-1 point. This is the point where $1 buys 1 Swiss franc. If you go back to the breakdown of the Bretton Woods around 71, it took 4.2 something Swiss francs to buy $1. Today it takes 0.81 Swiss francs to buy $1. So I inaccurately described that. I apologize for that, but I was correct in describing this chart. This is decline of the dollar versus the Swiss franc. I just didn't explain it very well. So to explain it so you can understand it, it now only takes 81 cents of the Swiss franc to buy 1 US dollar, whereas it took 4 point something. So I want to go to the next criticism, and that was a real common one. A lot of people commented on that. In my last video I talked about how silver has not surpassed its previous all-time high. Now you have to recognize this is a monthly chart, so the spike to 50 is not visible on this chart. It's actually a tie, but you can't see it. I don't know why, possibly because it was so rapid, but the point I was trying to make is that the all-time high in silver has still not yet been surpassed as we trade. And a lot of people commented, well, you can't go by that price, you have to go by 6 or 8 or 9, etc. So I wanted to take you to some charts here, and this is MRCI Moore's free charts, and I've linked this before. I'll link it again. But let's look at some other metals here so I can give you an idea of what I'm talking about. Let's look at COMEX gold. Okay, here is the 79 high. There's a spike top high at 850. But really the normal high was around 700. That's the most sustained high at tradable levels. You can see we're up at 1600 now, so we're more than 200% of that price. Let's go and look at, we'll look at them one by one. Let's look at copper. Copper is now at 450 roughly. The all-time spike high of the 79 period was 150, so we are 3 times that price. And we'll look at platinum. In 79, platinum spiked just above 1,000, and we're now at 1,800. And palladium hit a spike high in 79, just above 300. 350 was the top, and we're at 800. So the argument stands that silver is still, relative to these spike highs that occurred in the last inflationary wave, silver is still the most undervalued metal compared to the others. And I did comparisons based on new cars, new houses, etc., but silver is a ridiculously underpriced commodity. So let's pull up the chart and take a look. Now, if you remember, based on the daily chart, I used a descending wedge trend line with 4 points of, this is rough because it's a long range chart, but you can see I predicted that if we broke above this descending trend line, we would go, and then we had multiple levels of resistance. Now, these have all been penetrated. So this price range here, which was met and then exceeded just in the month of April. Well, I can't get it straight, but we'll use that. You can see the first time we exceeded this price range was back in April 10th, and we crashed down below it in May 2nd. So this is just a 1 month period that does not set up a lot of resistance, and you can see we're moving up through that. So this is what I expected. I fully expect a move like this. We may level off and go higher, but I think we're going to just head right up and challenge that 50. So I wanted to address the last issue that a lot of people have talked about my position on China and how China's influence and entrance into this market is going to have a tremendous impact. And I know SGT Bull has addressed this issue with the new China exchange, and Andrew Maguire has been quoted, etc. But I want to take a look at China real quick, because I've had to fight China bashers for the longest time, and I talk to people constantly who talk about how China's books are cooked. I really don't think China's books are cooked. They may be cooked a little, but compared to the United States, I don't even think there's a comparison. So here's an article that came out July 18th of this year, so that's today, and we're going to look at China's numbers. Now, I have been listening, and this is no exaggeration, I have been listening to the China bears talk about how China is going to crash for at least 5 years running, and they say the same thing over and over and over and over. I can't tell you how many times they say that the US has gone into recession, China's going to crash, etc., etc., etc. There's no evidence of this, and you can say China's numbers are cooked. I don't think they are. They may be, somewhat. I actually think that China's numbers are probably more honest than ours, but let's read this article. China just released its June numbers with 3 separate official sources delivering banking and money stats, international trade stats, and the core economic data. The June GDP numbers were pretty strong in the scheme of things, and the rest of the data pointed to a high likelihood of persistence in economic growth, at least in the medium term. In this article, we'll explore some of the key data points and come to a conclusion that a hard landing, significant slowdown is not a 2011 story. China managed to show year-on-year GDP growth of 9.5% in June quarter, which was slightly lower than 9.7% it showed in the previous quarter and 10.3% in June 2010, and compares with a 10-year average of 9.4%. So in the scheme of things, GDP growth does not show a significant degree of slowing. However, if you redefined, listen closely, however, if you redefined recession for China as passing below the long-term average growth rate rather than descending into negatives, then China could dip just below that line later this year. Now that, folks, is desperation. We all know that a recession is negative growth. China is still growing at 10%. Now, you don't have to be a mathematician to figure out that anything that grows 10% year after year after year is going to exceed anything you can even imagine. So the China bashers are wrong. They don't have a clue. They don't know what they're talking about. They've been wrong again and again and again and again. I can't tell you how many times I've argued with the China bashers who said, well, China's going to crash because of this or that. China's not going to crash. And the reason why this is important for silver, I'm going to show you. Let's go to the Patriot Radio News Hour, and this is a radio show by a couple of guys, Joe and Eric, who have been selling and buying, but mostly selling, silver and gold for the last 15 years. So they have their finger on the pulse of these markets, and let's listen to what they have to say.
This is going to be our busiest month ever in the history of this country. I mean, look at this morning already. We're all actually running out of gold. The same thing that happened in the silver markets is now happening in the U.S. $20, $10, and $5 market. I've never seen it, ever, never. And throughout all of this, let alone July. So if you're having trouble getting through, I mean, I almost didn't do a show today. I'm like, do I really need to do a show to tell you people that you need to buy gold? Because if you don't get it, buy now. And I still have people that call me going, I've been listening to you now since you first came on the air. Uh-huh. I believe you. It took a while, but I believe you. So anyway, everybody's waiting in the bond market, according to Ira Jersey, U.S. interest rate strategist at Credit Suisse.
So you can see that people with boots on the ground in this market, they can't source silver. They haven't been able to source silver for a while. And now they're not being able to source gold, the physical. So, and you can see from this chart that the people who said this was a bubble, if this was a bubble, it would continue down on this trend. It's not. This trend is more similar to this trend than it is to a bubble. So silver's going higher. It's going much higher. I think my prediction based on technical action is that I think that silver's going to get to 100 by next year. I don't know how it's going to get there, but I think it's going to get there. If we go out to the weekly, you can see that the weekly is about to cross over. Now, it's unusual for the weekly to cross before it hits the zero line. So in the past, we've always touched the zero line, or nearly, and then rallied. But now it could be different because that's how strong this market is. So if this MACD crosses over in the positive line and goes up, which I think it will, as you can see, we're now up to about 1 on the MACD cross on the daily. We could exceed this last price. So hopefully I've dispatched with some of the criticisms. I've been bullish the entire way. I didn't pick the bottom at 32.50. Actually, I bought some at 39. There's some people who bought at 35 and below, but I think this price action pretty much proves that this bull market is nowhere close to being over, and you need to keep buying silver. The price of silver is going to go exponential. I think at this point, with the fundamentals the way they are, $100 is cheap. I think $300 is cheap. Actually, I think $1,000 silver is still cheap. We've got to get to 1-to-1. I don't know how long it's going to take us to get to catch up to the price of gold. We're at 1600. We just broke new highs in gold, and I think that silver needs to catch gold before we even get into the scenario where we're looking at a type of top or a beginning of a type of top. So silver's got to go exponentially higher, and it's going to do that, and you just need to keep stacking, and we'll talk to you next time.